Hey guys and girls, welcome to this week's episode of the No BS with Birchie podcast. I'm your host Nathan Birch. This is the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. I need to do this video for you folks that are first home buyers, parents, whoever's going guarantor. This is big reality check. Really, really, really important, right? Make sure you share this to all your first home buyer friends and your mates of your age. If you're going to the bank of mum and dad, right, whatever, with caution with this. This is very, very important. There is a lot of risk here. I want to break something down for you. I'm going to reenact a phone call I had with a new client the other day, without revealing the details, of course. Because I said to him, I was like, we'll just sort of chat, and I was like, fuck, I wish I could film a podcast right now answering all your questions, right? Because it was very, very important. I realized that a lot of people are not assessing the risk when going into a guarantor, and there's a lot of risk that's attached, right? So I guess, you hear about on the news, they talk about the bank of mum and dad, the guarantor loan. What does that look like? What is that, right? How does it happen? And what happens, right? So let's say, for instance, you go buy a property for $200,000, right? The bank will require that you put down like a 20% deposit or a 10% deposit, whatever the deposit amount is. The bank will require that you put down a deposit, depending on what the loan structure is. It could be a 5%, 10% deposit, 20% deposit. So if you're buying a property for 200 grand, you need to put down 40 grand deposit or 20 grand deposit, something like that, right? If you don't have 40 grand or 20 grand, the bank will give you the loan for the whole amount, but they want to get the equity from somewhere else. So if you have your mum and dad or whatever, they might have a property, which could be an auntie, an uncle, a brother, or a sister. Someone could have a property that you could use as a security, and most time it's mum and dad or whatever. So we'll just use that as the example that mum and dad are the one that's being a guarantor, right? So let's say they've got a house, it's a $1 million house, they bought it for 200 grand, they owe 200 grand on it, and they're going to go guarantor for you. So what happens on that front is the bank will tie in their property as yours. So if the property's worth $1 million, they can have up to an $800,000 loan, right? If they've got a 200 grand loan, there's 600 grand equity there. So the bank just cross collateralizes your loan with theirs and links their property to your property, and therefore they've got enough security so they can give you the full $200,000 loan. If you default on it, well, then they get their money back. If they don't get enough money back, then they go to your mum and dad and say, well, look, you're on the hook, you owe us some money, whatever, right? You could do whatever problems that come your way. It could impact your parents because they're now in business with you. They're in that relationship of you owning that property. So it's okay, right? Like, it's like, okay, I want to help out my kid or want to help out whoever, let's go guarantor for them, right? But the question they got asked me was like, let's just use an example here, right? $1 million property, the parents own it outright, right? This person wants to buy a property for $250K, right? And they need $50K as a deposit. And they asked me, is it a good idea to get a guarantor loan? And I can't give advice because I'm not a financial advisor, but if I was a financial advisor, I couldn't give the advice that I give anyway, right? So it's catch-22. So I just talk about things in riddles and always ask people to be their own financial advisor and to think of things logically, right? So we ran through the scenario and I was like, if it's going to get you in the market, it's good, right? Would it not be good? Let's have a guarantor. But I was like, is the guarantor the best way that your broker's setting it up for you? And he's like, well, I don't know anything about it, right? I'm just going with what my brokers told me and what what people were telling me. So what I asked is you're wanting to borrow 50 grand from your parents, but you're putting the risk of $1 million asset to get you 50 grand, right? It's like taking your mum and dad's house to a loan shark to cash convert and say, hey, give me a loan on it for 50K, right? It's a lot of risk, right? I said, if it was me and my parents in a position and I had to do this, then I would look at it from a different perspective and say, hey, mum and dad, have the conversation. They'd be like, hey, there's a risk there. It could hurt you, right? What about if I was to borrow $200,000 from your equity? So they get a loan at $200,000. They've still got their property. They still have full control of it. Your property is not connected. They take out a 200 grand loan. and lend you $200,000, now you've got $200,000 in capital. You can use that as deposits on 1, 2, or 3 properties, right? And then as you get the equity back from those properties, you can get that money and pay back your parents' loan. And then you get out of that way. Because if you bought one property, buy a property for $250 attached to the loan, your parents are now tied with you. For you to get out, the property would have to go up in equity. You get the equity out, it has to go straight back. It releases you from them. You want to buy a second property, well, now you have to go back and tie your parents back into the deal, right? So it becomes most inhibiting as you're trying to build out a portfolio. Secondly, the risk could spread over to them. Third, what happens if your parents don't want to work anymore and they want to retire and they want to move to the beach, right? And your parents want to sell their house. Now they can't sell their house because their house is now attached to your loan, right? They could sell it and then pay you the balance, but it just ties you to your parents. What happens if you get into a relationship with someone and they want to sue you, right, for spousal support or whatever the case may be, right? At that point, your parents are now implicated because now what's the equity in the property? What did your parents put in? You're dragging your parents now into a potentially, a family law matter, right? Because if you had a spouse that could try and demonstrate that they are owed or entitled to some money or whatever, what happens if someone wants to sue you, right? Are these questions that you've fully asked in working out? Most people just go, oh, the broker told me to get the property and they'll tie the loan together. I don't know how it's happening, whatever, right? You want clarity when that loan structure is being set up. The options are either just go guarantor, throw your security in, tie yourself. Your parents can't sell a property. They can't retire. They can't do this. They can't do that. You're putting them at risk. If you default on it, then it could gobble up into any level, right, of their property. Instead, if they were to draw a line in the sand and say, okay, we're going to pull out equity and pull out $50,000, $100,000, $200,000 and go, here's the equity, we're going to loan it to you, we've got a second loan on our property, they know that, okay, that's the line in the sand. If little Johnny wants to go and blow his arms and legs off and he does something stupid, well, it's not going to impact their whole lifetime of working, right? So, yeah, it's like, how can you try and minimize the risk on that front? And I don't think there's anybody talking about it, when it comes to the broker or the banks or anything like that. It's important that you understand this, right? So I thought it was very important for me to make this video, to look into all this sort of, and go down these rabbit holes. I've got some other little topics that I noted about this today, and I'll get into that as well. But if you do have a question or you do need help, I'll put a little thing on the screen here with my finance company, Zinger Finance. Reach out to my team. I've got a large team of brokers that specialise. We at Be Invested don't have many people doing the guarantor loans, right? And I was thinking about the other day, we might get like 1 out of 200 people that would do a guarantor, and I help out so many first home buyers, right? Because the properties we're buying are so cheap. We're buying a property for 100, 200K, get 20K here, 30 grand there, 40 grand there. You don't need millions of dollars to buy a property, right? But so we don't have that many, but the ones that we do, we don't have any. That we've only had one, which we didn't do the loan for. They did it and they crossed everything together, and it worked okay for them, right? It wasn't, they didn't have any bad issue, but you're adding risk to the table, right? But if you do need help, the details are below. Reach out to my team at Zinger Finance, and tell them you've seen the podcast on the guarantor and discuss with them what options there are. I'm not here to give you all the answers. I'm not the finance guy. I'm just a property investor that helps lots of people, build portfolios and massive wealth on their journey. So reach out to my finance team. But I guess, when I'm buying properties, like the majority of my investors, we like to put down a 20% deposit because then you avoid the mortgage insurance as well. I understand that you can't always go in to a property with a 20% deposit. So other options you may have is you could put down a smaller deposit. There's first homeowner grant incentives out there where you can put down a smaller deposit. The government pay the mortgage insurance for you, which I don't even think that's always the best thing to do anyway. I'm not saying don't get a first homeowner grant, but I think if someone's going to buy a first home, specifically for first homeowners, this part is that if you're buying a property, you have to fit criterias, right? It's the right property you should be buying, a brand new property, a house in this location. Do you really need to be moving into that house? Or are you buying the property just in order to get the first homeowner grant, right? I think 9 out of 10 times, it's probably better to just leave the first homeowner grant, right? I'm not saying to do that. It's no advice, right? Do what you wish, right? But you need to consider, like, is that property going to help me get the question that I ask when I'm buying a property for myself or for one of my investors or for anyone, is what is this property going to achieve for me? How's it going to help me 2 steps down the track, right? So if you are a first home buyer and you have to buy a property that's brand new to get the first home in a grant, you have to live into that property. You might be spending $800,000 on a property, which that could be all that you could service for at the bank. So you get into it, you get your $10,000, $20,000, whatever as an incentive, but now you're stuck on this mortgage for the next 10 years. Well, you're really on it for 30 years, but let's say trying to play catch up, you can't service at the bank for the second property because you've used all your servicing by buying the first property, and you got $20,000 as an incentive, but now you're stuck in this mortgage trap, and it's not even your dream house. It's like the $800,000 home isn't your mansion or the house that you want to have your kids in one day when you get married or whatever. So you need to look at the bigger term strategy of what am I buying this property for? What is it going to achieve for me? How's it going to help me get to where I want to be? And I think the guarantor in all is a fantastic thing. If your parents can go guarantor for you, that's like a blessing, right? I never had that. 99% of my investors that have their 10, 20 properties didn't have that. But those that do, it's great, right? So you might be sitting there thinking, I'm shit out of luck, fuck, I can't get into a property. You might have someone in your life or circle that could help you out as a guarantor, right? So it is an opportunity there. It's a great opportunity if you can get it, use it, right? But how you do that is the important part. And I think that 99% of people that are going guarantor don't even question. They just go, oh, okay, I'm just going guarantor. We'll sign blindly. Don't even look at that. But they're not thinking about 5 years' time, 10 years' time, I want to retire. My kids need to get off there. What's it going to look like, etc. So, yeah, from that perspective, I think lots of questions need to be had. If you do want to have more of these questions with a one-on-one chat with one of my team, reach out to my investor relations team. You can contact us 1300 367 925. Email us at admin@beinvested.com.au. Have a chat with them about what options there are. If you've got a kid that you want to help out, have a chat about, let's have discussions, right? That's what we do. It all starts with discussion. I've got people today I spoke to 10 years ago that are just getting started now. I've got people that have got their 12-year-old, 13-year-old kids that are getting, prepared to save their first deposit. I've got people that I met 15 years ago and they had a 5-year-old that's now a 20-year-old, and fuck, I'm old, right? But I'm helping them build a property portfolio for their kids. So it doesn't matter what walk of life you're in, we can help you. Feel free to reach out to us. I'll put the finance details here once again if you want to speak to my finance team. I just don't have them memorized in my head, so the phone number, the email address here. If you have any questions, jot them down below. We're here to help. That's what we do on a daily basis with all our investors. So thanks a lot for watching. Like it, share it with all your people that you know, that whether someone's going to go guarantor, or you've got a parent that you want to have helped guarantor, but they don't know much about, what's the guarantor in it for me. You can just isolate it, right? And isolating risk is very important. As an investor with hundreds of properties, the risk always has to be, it's like going, okay, well, that's the worst case scenario. We've identified it, locked it aside. That's as simple as it is, but 99 people do it. 99% of people doing it are not protecting themselves like that. They think they're protecting themselves, and some people might say, I don't want to get a loan for 50 grand out to help the kid. They want a loan, they get it, right? But they're putting themselves at so much risk because they've put their whole house up on the line for that. Just take the loan, put the loan. If you're helping out your kid, you're helping out whoever, you understand there's risk, right? But you're limiting that risk. So if you like this, share it, and make sure you subscribe. Apple Play, Google Play, Spotify, and YouTube. See you back next week. Have a great week. Thanks a lot for watching. Bye for now.
Like Bilal said, man, we stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated.